Eric Mother, Mother.com, with US market analysis for the weekend of November 19th and November 20th, 2016. With about 15 minutes to go, so how markets are shaping up to close the end of the week. Friday session here sees the market slightly down. And let's take a look at those charts. Now, before we take a look at the charts, one thing I'd like to remind everybody is just keep in mind that we have Thanksgiving here next week. Don't be surprised to see that your markets close at all-time highs here. It's just what they do before the holidays. Just keep that in mind. Of course, we are trading right now here on Friday. Got about 3 days before they close the market just before the holidays, in time for the holidays. Don't be surprised if your markets are trading at all-time highs. So let's take a look at the chart. What I'm going to do in this video, I'm going to split the video in two portions. The first portion is the bullish argument. The bullish argument here is, if you take a look at the NASDAQ, it is definitely breaking out on its weekly chart above the prior all-time weekly closing high. And that level so happens to be at 5312.00. which is the previous all-time weekly closing high. As long as the NASDAQ is breaking out above this number, you have to give it the benefit of the doubt. Now keep in mind, because the NASDAQ had come back here and moved above RSI 50 with uniform action, the market would go on to record fresh highs here and above that. Here we had uniform activity below 50 back above it, and again we can see that it is already trading at fresh highs, which is what happens when markets bounce with uniform activity around RSI 50. So the idea that the market can move higher remains on the table if it can sustain levels above 5312. Keep in mind, on the monthly, the NASDAQ is also breaking out. So as long as we have monthly and weekly breakouts for the NASDAQ, again, the same level on the monthly, which is also the weekly closing high previously recorded, 5312. As long as the market is above that number, you have to give the market the benefit of the doubt for higher prices. Take a look at the S&P 500 here, and we can see that it continues to attempt to break out above the current all-time confirmed weekly closing high, and that weekly closing high for the S&P 500 is at 2184.05. So if it can hold above that, that's good. Otherwise, failure to move above that previously or the current weekly closing high becomes a problem for the S&P 500. And don't forget that we are still seeing the Dow above the previous weekly closing high. So the Dow is working on week number 2. In other words, the Dow is confirming or doing its best to confirm the previous breakout. And for the Dow, as long as the Dow is holding above 18,576.47, this is a good enough breakout to start playing momentum names to the upside. So that looks good in terms of the price breakout. And also keep in mind, this coincides with the Dow also moving above the previous monthly closing high. So these are all-time monthly levels for the Dow. If it can close above the previous monthly closing high for the month, it would be recording a fresh all-time monthly closing high. And here we see the previous one going back to early this year. That's also a good monthly breakout. So month to month, the Dow also continues to look good. So really, the fact that markets are breaking out is the biggest takeaway. If they can sustain above the breakout levels, who knows? We might be looking at markets that could continue recording higher levels in the coming weeks and in the coming months. Now let's flip the script and take a look at what could be the problem in the market. In other words, some of the bearish signs developing. Take a look at the NASDAQ daily. There was a break here, and that break was a warning break. During this pullback, we draw a line from there, and this is where the market is stalling right now. So take a look at where the market is stalling. You go back to the highs in intraday or the closing highs for the NASDAQ. You can see there was resistance with uniform activity here for those highs right there. And also we are coming back and doing the same thing right here. Now keep in mind, we should also mention that this attempt to record fresh daily highs is coming with the NASDAQ stalling at about RSI 61.8. That might be, when we look back, one of the problems that the market is facing, and that ultimately brings the market lower. So that's a problem right there. Resistance on the red line that has been a problem since the highs going back right on that day. Now keep in mind also, we can take a look at the daily closing high. So I would say that's a red flag, and that could be a problem right there. So that red flag becomes a problem because the market right now is saying that it has failed to move above the prior daily closing high. So failure to hold above that level, we start looking now for the possibility of a pullback. Don't forget, if we take a look at the NASDAQ from a weekly standpoint, if we assume that we might have a down week, so let's say that right now the market is showing an improvement in week to week price closing highs. Of course, we haven't closed for the week. We have about 2 minutes before the close. But let's say the market is making this attempt to new highs. If it doesn't hold next week and we show confirmation of negative divergence here, where the technicals are not improving, that by itself, that negative divergence, could be another reason why we start now we could change our equation to start expecting lower prices. Also, let's take a look at the Dow on the weekly, and the Dow is the one that has been a problem in my opinion, because if you take a look at the Dow 3-year weekly chart, right now it is coming back and has been struggling this past week to hold above the topside resistance line, and that creates a situation where we can start expecting a pullback. So this line here, so there's the market close for 2016 November 18th, and so we can see the market is closing precisely with the resistance on this line here for the week, which creates a problem. So this is a visual problem for the Dow. In fact, let me update that to see where it closed. So it did close with a positive gain for the week, albeit about 20 points. So that's a confirmation of this weekly breakout. So it's not bad net, but you can see the challenge here is on the RSI. So you take the top side of the weekly RSI, and you see that we've been unable even this past week to close above that level. So that's one area we can watch for evidence of resistance and rejection. If that is rejected on the RSI here, then clearly we start looking for a pullback. Now don't forget, there's also another line coming off the highs previously, and so there's another line from this break here. So this break, we talked about this in the past weekend and over the last couple of days. This break brought the market off the highs there. We would subsequently go to this drop, and then again this drop. So we draw a line from there, and this line has been very useful actually. You draw it like that. So the market has been struggling here. It struggled for the highs there. It would come eventually and move back below that red line for the highs even here. So right now we are watching this level here. If the market stalls back below that line, we start looking for evidence of a pullback. But this line by itself, if you're looking for the main takeaway on the weekly chart, I would say it's a simple resistance line right here. Above that line, and I would say the market is still bullish. Rejection on the same line, then we can start thinking that the next swing trade is going to be for markets to move low. So continuing with the bad here, we can see at the close of this week, the NASDAQ or the S&P 500 was unable to close above its current weekly closing high. It's 2184.05. So right now we close below that. Right now it's looking like a failed breakout, unless we can break out above that level in the coming week or weeks. But so far, that's a failed breakout. We've been unable to close above this number for 2 weeks in a row. Might suggest that now things are starting to look like they're running into some resistance and could be pulling back. Now, if you really want to see a bearish look, it's the S&P 500 daily right now. but we can see evidence of resistance if you draw a line connecting recent RSI highs. You see, as of Friday and the last couple of days, we seem to have run out of momentum, and we can see evidence of this right there. Topside resistance coming into play for the S&P 500, and there's also an additional layer of resistance coming from this recent break. Now that break brought the market off the highs right there. All right, so we draw a line from there, and as of right now, S&P 500 has hit that line, and as of Friday's close is showing resistance on those two lines, suggesting that day to day there is an emerging strong argument that as long as we are seeing resistance on these two lines, the next swing trade is going to be lower. If the bulls want to change this look, all they have to do is take out those two lines and also take out the S&P 500 daily closing high. So the problem here is that we did end the week with resistance and confirmation on those two lines. You got this resistance here. Let's draw it a little bit higher. So you got this resistance on the daily. And actually we can draw that a little bit better. So it's this line here. It's already resistance as of Friday, and also topside resistance on the S&P 500. RSI suggesting that by itself, without knowing what the future brings, might suggest that the next swing trade for market is definitely lower. In conclusion, don't expect a major pullback in markets as long as the Dow is holding its daily RSI above 69.1. Eric Muadh with Muadh.com for subscribers. Be on the lookout for part 2 of this weekend's market analysis video, where I do intend to find you some fresh ideas. Otherwise, enjoy your weekend. Eric Muadh with Muadh.com. Peace and blessings. ECS.